Ladies and gentlemen, good morning and welcome back to the Arab Household Savings Conference. Yesterday we had a fantastic first day with the great insights in the first 4 sessions. And now we are starting day 2 with a brand new topic about building a regional household. First of all, about building a savings economy and probably also about building a regional household savings index. Let me set the scene by, I'll come to the introduction of the speaker, but let me set the scene first on this topic, and then as I start discussing the points and the talking points for this session, I'll also do the speaker's introduction. Saving rates globally declined, but also regionally declined from 30% in the 1970s to just 10% currently. Numerous surveys also say that 40% of MENA populations don't save any money. 80% of them, they save, but they are not saving enough. We've been brainwashed by consumerism and consistent bank advertising to lure people to take loans and live beyond their means, with consumer debts in the 6 GCC countries exceeding $100 million on a daily basis. Now, this session tackles household savings as it relates to social liberty, if you like, to behavioral economics, to fiscal and growth policies. And in so doing, we shall follow an induction approach, if we can borrow that from the world of academia, moving from the smaller questions to arrive at a comprehensive judgment. So as we start, let me go to the speakers and maybe allow them 1 minute to introduce themselves and their profiles and so on. And moving from there, we shall start posing the questions. So let's start with maybe Dr. Jarmo first.
Yes, good morning, everybody, and thank you, Ebrahim, for having me here. My name is Jarmo. I am an economist interested in sort of broader economic development issues, also financial sector development in particular. I have been in the region for a very long time, first in Saudi Arabia, and for the past 10 years in Bahrain, where I'm working for the Economic Development Board, the Ministry of Finance and National Economy, and Keen, which is a government fund that was set up for the purpose of driving economic diversification and human capital empowerment.
Excellent. Natalie?
Yes, good morning, everybody, from a very sunny Brussels today. My name is Natalie Westerbarkey. I'm very pleased to participate in this conference of Arab household savings, especially because I've lived myself in the MENA region for 3 years in Abu Dhabi, and would like to thank you very much, Mr. Ebrahim, for the opportunity to participate. So I will be covering the asset management perspective, and I have 2 roles. I'm the head of EU public policy for Fidelity International. So Fidelity is a global asset manager with about $800 billion of assets under management. And we offer pensions products and savings and investment products and very long-term and active manager. But I also have a second role within our European Industry Association, which is called EFAMA, where I'm the vice chair of the Investor Education Committee. So I will cover that perspective as well. Thank you.
Oh, beautiful. Dr. Jaffar?
Hello, good morning, everybody. I'm Dr. Jaffar Al-Sayegh. I graduated as Economist from UK, and I worked as an economic lecturer for different universities like Bahrain, NYIT, and and in the UK, Al-Sayegh College. I work for the Ministry of Finance, okay, as um, as economic researcher, and for the Shura Council for 10 years as economic advisor. I've run a small business, Al-Ula, for consultancy and studies, and that's all. Thank you.
It's a great honor to have you, Dr. Jaffar. Do we have Khoula on, or she still has a problem with her connection? So we shall proceed until we get her. So let's start the discussion with the culture, the mindset, or the mindset for saving. The culture itself, the mindset itself, should that be left totally to the individual behavior, randomly done by some in the demography or in the community, or this should be a national economic priority? I mean, how fundamental is savings to a society's social and economic health, in your opinion? Let's start with Dr. Jaffar, since we ended his last introduction.
Is that was a question? Can you repeat the question, please?
So let me say that again. I think it's a question, but maybe an extended one. It's hypothetical. The mindset or the culture or the behavior of savings, should it be left totally to the individual choice, individual behavior, randomly done by some in the community, in the demography, or it should be a national economic priority? How fundamental is savings to a society's total socio-economic health?
See, I don't think it should be left to the individual or left to the public. Saving, if you ask me why, saving is the importance of saving is just the importance of consumption. We need to consume goods and services, and we need to plan for the future. We need to reserve a part of our money, a part of our income, a part of our income for the future. No one, no individual, no country has no plan to for the reserve, for the savings, and it can achieve any economic achievements. Saving is important, like consumption. Even if you go for the individual with the low income, they are supposed to be known about what is the importance of saving, what and how we can say, and how can they save, how can they save. I think we should have a national plan. We should have a national plan for the saving, and it is indexed. It is indexed. It is recorded. If the country with a low saving, that means it has something. It has a problem with its economy, with its policy, with its planning, and a country with high saving, that is a country can perform well and achieve the economic, and can face the different challenges in the future, whether for the government or for the individual. We should have a plan. The individual should have a plan how to save. And later I can present the importance of saving. That's it.
Fantastic, Dr. Jaffar. I think you've summed it nicely. Saving is equal to spending. I mean, if spending is fundamental, is necessary, then savings is too. This is fantastic, Dr. Jaffar. And of course, we cannot leave the lady to last because we, right now, we are losing balance. We have two gentlemen and a lady after losing Khoula. So let me go back to Natalie. Maybe if you would like to comment and explain on the same topic that I posed to the panel.
Yeah.
Yeah.
Thank you very much, Ebrahim. So I would say that household savings are essential to have a strong national economy. It's an imperative, therefore. And because we are now, especially in the economic situation that we're finding ourselves in the MENA region, but also worldwide. So we had the last 2 years of the pandemic, which substantially disrupted the global economy. And now recently we also had the very sad situation with the war against Ukraine, which will also disrupt global supply chains. And there will be a lot of spending by the governments to mitigate the risks and the costs of these situations that we have been facing. Therefore, it is essential that the private households mature and that they become more independent and self-sufficient, and that they rely on their own savings rather than government support. Especially, we will now need to expect that the inflation rates might not be just transitory. So before the events of February this year, there was a long debate whether inflation might be just a transitory situation, but this has changed over the last 5 weeks. We need to completely amend and change our outlook for this in the coming year especially, or might be even longer. And there is a possibility that the inflation rates might be higher than expected, might stay longer than we wish for, and might be rising quicker over the next couple of months within this year. That is a scenario, that is a possibility. So it means that overall there could be a rising cost of living, so rising energy prices, also driven by supply shortages. So it is of utmost importance that the households not just save the money on the bank account, but that they protect their savings against inflation through investment. And here I wanted to spend a couple of sentences on the very recent IFAMA Investor Education Report, because it explains how and why should the households save more, and also how would they invest, how to go about it. I will also drop the link of this report into our Microsoft chat room so that the audience participants here can actually see the copy of that report. It's a public report. Again, IFAMA represents not just the views of Fidelity International, but of the entire European asset management industry. And it has 3 parts, this report. So in the first part, there are external contributions from authoritative such institutions such as the OECD, who have undertaken very studies in this area, household savings and investor education, as well as from the European Commissioner McGuinness, but also the global standard setter for capital markets, IOSCO, so with some introductions and contributions that explain the importance of household savings and the link between investor education, financial literacy, and robust household savings. And the second part of this report comprises some guidelines. And these guidelines are the result of a joint experience, and show, especially over the last couple of years, there have been 2 trends that are very important for household savings. One is the sustainability, and I can elaborate a little bit more on that in another round. And the other one is digitalization, so access to savings products and investment products and knowledge. So it also proposes within these guidelines an action plan. And the third part comprises case studies of individual corporates such as Fidelity, but also national associations. And especially the guidelines is something which it's a very long report of about over 100 pages. But the guidelines, I think, would be especially important for this audience. It's about 7 pages only. It's sort of the core piece of it. And perhaps worth even translating it into Arabic, because a key insight from the OECD and from the authorities in Europe, for example, at the EU level, but also national level, is it's very important to deliver financial and investor education in the local language and the local culture. So even if one translates it into Arabic, I know that in the region there's a different, there's a very diverse language in a very diverse region culturally, although everyone knows that there's modern standard Arabic, but of course it also needs to be delivered in the local Arabic language. And that, I think, is key to unlock the knowledge of the citizens, not just in Bahrain or the GCC countries, but in the MENA region more generally. I hand back over to you now, Ebrahim, and will elaborate more on the next round, and I will post the link of that report into our website.
Thank you so much. Thank you so much, Natalie. I think maybe what's emerging from your talk was that maybe we have a breaking economic news that inflation may be not transitory, will stay longer, will rise quicker, and therefore the cost of living is going to continue to rise, and therefore saving is of an utmost importance. We come now to Dr. Jarmo, who is a very veteran GCC economist and author, and maybe this is a topic or a question that's so close to his heart. Doctor.
Thank you, Ebrahim. It is indeed a topic close to my heart. John Maynard Keynes, the famous, legendary British economist, one of the founders of modern macroeconomic thinking. And back in 1936, in the middle of the Great Depression, he published a book called The General Theory of Employment, Interest, and Money, which for decades was eagerly, avidly studied by undergraduates at universities all over the world. In that book, he talked about how to fix a broken economy, and he also presented a lot of very sort of basic concepts about how an economy works. And one of these memorable identities that he had there was savings equals investment. Very simple concept. What he meant by that is what a society saves is the amount of money that the society invest in its future. In other words, in its future development. And of course, conceptually a simple idea. You eat what you have today, you won't have it tomorrow. You invest some of what you have today, let's say, in a farm, and you'll have food for a long time. And I think that Keynesian identity really underscores the importance of saving from the sort of macroeconomic perspective. Of course, for individuals, saving is critically important, and I won't repeat what my fellow speakers have said, but it is important in terms of building financial resilience and security. Of course, the so-called precautionary saving, the value of it has been underscored by the recent volatility and risks in the global economy. So you have some money put aside for the rainy day, but also your future security when perhaps your income profile changes and then you are able to draw down your savings. I think savings is also culturally very important in the sense that it allows people to take control of their financial futures, but also sort of inculcates strategic thinking. You can see how your money grows, you can make different decisions about your money, and with any luck, you start to see that there is value to saving in the sense that your dinar with time becomes more than a dinar, as opposed to just being sent and enjoyed in the heat of the moment. And of course, for the country as a whole, or the economy as a whole, saving is capital mobilization for development. I mean, one of the beautiful things about saving is that when it is done by professional financial intermediaries or asset managers, then chances are that the money is actually invested wisely. So it is, let's say, not all going into Bitcoin. Perhaps some of it nowadays is. Clearly, in the GCC context, we need to appreciate the fact that there's a big cultural transition that has to happen, in the sense that what I call the Arabian welfare state has, in the generous and nanny state, has in many people's eyes reduced the need for structured saving. When there was a problem, the government would run to the rescue. Pensions were still in many cases are provided by the government. When you fall on hard times, there is government support available. So if your first inclination is to look to the government at a time of need, you may undervalue the importance of savings. But of course, again, having some money of your own is a source of resilience and security. The other challenge, quite frankly, and this is partly because there haven't been more savings, is the relative underdevelopment of financial markets in the Gulf. But this is a chicken and egg game. So in order to develop those financial markets, we need to devise more and more efficient mechanisms for pooling and allocating capital. And I think we've seen many examples around the world of encouraging savings, structuring savings, whether it's for pensions or it's for other things, becoming quite a powerful driver of financial market development and broader economic development. Thank you.
Fantastic, Doctor. So maybe the headline from your talk is how to fix a broken economy. It's by encouraging saving, because savings fuel investing. And if from the literature that we read on savings and economics, economists such as yourself say that if you want to build a strong economy, one that grows maybe 3 to 4% annually, then for sure you need an investment of say 25% of GDP in that economy to achieve the stronger growth. If this is so, then why policymakers, why government? I mean, the three of you have consensusly agreed that public savings and household saving is a national priority. But why, I mean, at the policy making level, it has not found its grounds or attached, or maybe they have not attached the relevant importance to it. Let me start with Dr. Jarmo, where you finished, and then we go to Dr. Jaffar and Natalie again.
Well, that's a much bigger question than it sounds. So I don't know how much justice I can do to it in a couple of minutes. But I think there are at least two dimensions of it that are very relevant. Number one, of course, governments like to be seen as benefactors. Governments like to be in a position to help people and thereby earning the people's gratitude. And it's not just the Arabian welfare state. You read any budget statement by a government in Western Europe and North America, and there are all kinds of goodies that are being distributed to sort of try to make the electorate happy. I think the other thing is that saving, when it is left purely to the will and preferences of the individual, only tends to go so far. So to sort of reach cruising altitude, you probably need some kind of government intervention. Now, there are basically two kinds that you could have with bit of economist style exaggeration or oversimplification. Number one is you can create incentives. Okay, and many countries, for instance, have tax incentives to encourage savings. Again, I think the economic evidence on how effective these are tends to be a little bit mixed. On the whole, probably some effect, but there are countries that have been able to do this without incentives, with awareness building and perhaps other cultural factors. The other thing, of course, is the government just forces people to save. Okay, now you could argue taxation is a form of forced saving, but also structuring the pension system, for instance, in a way that requires people to put money aside on an ongoing basis. And I think that this is something where then political philosophy tends to kick in, and I think obviously by and large people don't like to be forced to do things, and it's seen as an attack on their personal financial freedom, and therefore there are times when these kinds of decisions tend to become political hot potatoes and issues that are overly politicized, overly ideological in nature. So it never ends up being quite as simple as it sounds.
Dr. Jaffar, savings fuels investment, or savings fuel investing, and savings can fix broken economies, and we need to invest or inject 20-25% of GDP annually for our economies to remain robust and strong. What's your comment on this?
Well, I agree with that. I agree that saving without saving, no investment, whether for the government or for the household. I agree with without saving, no financial obligations. I mean, no a country can't meet, and household or can't meet financial obligations. Without saving, it is impossible to build wealth. And without saving, it is impossible to provide financial security and freedom, and secures you in a financial emergency. So this is the importance of saving. We need to make sure that we have the ability to save. We have the ability to invest, and we will be able to save, because by saving money, we can avoid even debt. So with saving, it is the essential aspect of building wealth and having a secure financial future. Some people, when I teach, I remember when I teach at the university or a conference or anywhere else, they said we can't save. Our income is 300, our income is 200, or even 1,000. We have so many obligations. We can't save. I said, if you just try to save, start with 1 dinar, as my colleague doctor said, start with saving 1 dinar. You will gradually be able to save more and more and more. When you save more and more, and you have saving, your thinking you will change from just consumption to investment. Because if you have a saving, you'll be able to think, oh, how should I invest this much of money? And you will start thinking about the opportunities, investment opportunities, stock, for example. So you have gain new knowledge about saving. So saving money gives you a way out of uncertainties of life, and it provides you with an opportunity to enjoy a quality of life. Investment, with saving, you can be investors in the future. With investment, you can avoid debt. With investment, you can avoid taking loans.
Thank
So,
you. Yeah, go ahead.
okay, that's it. That's it.
Okay. So moving to Natalie, but let me rephrase or maybe stretch this notion a little bit. Same questions. Since you come from asset management, we cannot talk about risk management without talking about risk management. There is no risk, there is no reward. Sometimes individuals, as households, as families, they lack a prudence, they lack financial planning and so on, and they live beyond their means by taking loans and so on. But unfortunately, sometimes countries around the world also lack a prudence at the national fiscal level, and maybe they live beyond their means. I, I don't. They take so much loans. Uh, they maybe they give too much. Maybe they are so benign. Maybe I don't know. They overspend continue consistently and so on. So if countries, if economies lack prudence or ability on national savings, talking about globally, but also the local population, the local communities lack prudence on financial planning and living within their means. What's the consequence? What's the byproduct for such situation?
Yeah, thank you, Ebrahim. So definitely, it sometimes can even make sense to have more, to have debt. It's about the balance, and it's, as you say, about the planning of the households and the sovereigns, and it's based on knowledge. So the more each household knows what is their balance between debt and saving and investment, the safer, the more they can secure their own financial future. And it might differ from household to household and from country to country. So it is very difficult to make a generalization. It is always, as a risk taking, needs to be tailored to each individual household. It depends also how big is the family, what are the spending needs, what is the income. So it's very hard to generalize. Hence, I wanted to also address a bit the question we're just talking about between the role of the governments and the households themselves. What's the responsibility? So, the governments clearly have a responsibility to take care and to protect citizens. That's clear. But the citizens also need to actively secure their individual financial future and their financial wellness and health. Um, so the concept, I think, that maybe hasn't been spoken about as much, that we need to be financially healthy as well. And the third is the role of the financial sector providers. So what is the role of the private sector industry? So the private sector, like us, we offer products, and the products, they differ across asset management, banking, and insurance. So a private company can therefore make it much easier for citizens to save money, to access world-class investment solutions, and to exercise options, to make their choice between different products, different providers, different sectors, and they also can change their mind. And that's something that the governments can't really offer in the same way as a more competitive market space of the financial providers that are in the private sector. But I go back to the point that I think most households may have not really reflected enough, or might not be aware enough between the difference of cash savings in a bank account, of pension savings for the long term, that they want to realize in 10, 20, 30 years time, or of investing into capital markets, so into corporates or into bonds, into other sovereigns, or into other asset classes like real estate, commodities, etc. So it's relatively complex, and here what helps is the concept of financial literacy. So thank you for posting also the pharma report on investor education. I would also think that many households might not even be fully aware of the implications or what it means to have inflation. When I speak to sometimes friends and family, I think it's something that we are not so conscious about, because we know in our day-to-day lives we experience inflation, but over a long period of time. It's sort of there in the background. It's not something that we realize it could be a threat to our cash savings, but now this is a possibility. And I wanted to highlight one very important point. So who should be delivering this financial literacy or investor education? Is that the role of the governments, or is that the role of the private sector? And I think the answer here is both. It has to be a combination. Why? Because we as asset managers, for example, we of course take investor education and financial literacy very, very serious. We want to inform our clients, but we naturally focus on asset management products and opportunities and risks in the investment world, whereas the banks and insurance might focus on a different segment, and hence only the public sector can truly offer independent education and holistic across all segments of the financial services industry and all products. So what, for example, Europe has done, they have a public sector EU level entity, which is responsible for the supervision of pension and insurance products. It's called IOPA. And they have established a financial literacy map. So there is a link to each country in Europe that shows the authority of a government that has initiatives to explain to the citizens what types of savings and investment products exist. And that is neutral, and it's delivered in the local language, and it's holistic across all products. So this would be also my recommendation for the MENA region, to establish some sort of central portal that would allow citizens to access such information to inform themselves, because we know that the more autonomous citizens become and that they can take care of their financial wellness, that would also link back to their personal wellness and health, like access to healthcare, access to education, and overall to have a better life. So again, it has to be a partnership between the governments, what they offer in terms of guidance, and the private sector in terms of what they offer in terms of guidance and products. So I hand back to you, Ebrahim. Thank you.
Thank you. Thanks, Natalie. Excellent. I'd like now to pose questions to both Dr. Jarmo as an author on GCC economics, and also Dr. Jaffar, who's been an economic researcher in Bahrain and the GCC. I'd like to say that our governments in the GCC have taken care of a lot of social services and welfare aspects the last 45 years, when oil prices jumped from $3 in the 1970s to $250 probably till 2014. Now, can GCC governments, can our governments continue to support such services, or we are now in a different fiscal landscape, different from the 80s, 90s, and the millennium? Maybe I start with Dr. Jarmo.
Yes, I actually was hoping to comment on another aspect of your
Go
question.
ahead. Go ahead. Comment on that and come to this.
As it happens, it does link to this question that you have raised just now, which is goes back to the idea of leading by example. And I think that one of the challenges that we have from the perspective of encouraging individual or household savings behavior is the fact that we've spent the best part of the 21st century living in a kind of an Alice in Wonderland economic environment where, of course, credit at the national level, high levels of indebtedness have become the norm. I mean, the triple digit public debt to GDP ratios are the new norm. And governments have repeatedly shown themselves very adept at kicking the can down the road on tough choices, partly because we have, for the most part of this period, lived in an environment of extremely low nominal and real interest rates by historical standards. So essentially, the fact that credit has been cheap has encouraged credit taking. The old ideas of economic volatility and risks have been muted, I think, by the perception and to an extent the reality that mighty central banks will come and work magic whenever something bad happens. And of course, the fact that ultra loose monetary policy has been the norm has also then pushed up asset prices on an ongoing basis, thereby creating this paradoxical situation where in many countries now, the easy way to wealth is to take a big loan and buy a house. And over time, that house appreciates and you pay back your loan and you actually end up with an asset. So I think there is a disconnect that has emerged between the kind of traditional concepts of long-term planning and economic prudence and the way people have, policymakers have dealt with this, what has really been a long sequence of crises in the 21st century, starting with the bursting of the dot-com bubble on the threshold, and of course now we have the Russia-Ukraine war. And I think what has been lost in this transition is the importance of leading by example and fostering a savings culture among the population. And I think that, honestly, in answer to your question, can the GCC countries afford to do what they have been doing? No, they cannot. That's the short answer. And of course, the new oil market realities make it unlikely that we will have oil prices and production going up at anything like the rate of population growth. So I think that's the fundamental challenge. And of course, then we have the broader issues of the energy transition, which I don't think will anytime soon mean that oil ceases to be an important factor in the GCC economies, but it will probably create a more challenging environment, more volatility because of the dynamics of the oil market, and it'll make it more difficult to depend on oil as a source of wealth and a source of growth. I think but this broader global challenge, I think has also complicated this transition in the GCC. The IMF, I think last year or just before the pandemic, put out a study about showing how quickly the sovereign savings of the GCC countries could be run down unless behavior changes. Now, this obviously hinges on all kinds of assumptions, but essentially, the sort of cold conclusion was that within 15 years, they could be left with no money in the bank. And that obviously is a simple way of saying, even if we challenge some of those assumptions, that something's got to give. There is a need for an economic and a cultural transition to think differently about the role of the government and think differently about things.
Well done, Dr. Jarmo. I think that was a fantastic overview on the transformative economics or maybe diversification initiatives within the GCC. Economics, Dr. Jaffar, Well, again, same questions. Will our governments in GCC be able to subsidize, to support the same social subsidies and services that we've been enjoying the last 40 years, given our current fiscal landscape?
Okay, see, first of all, GCC governments have taken so many steps and measures and policy to make sure that the subsidies will go on. But as long as they depend on oil as a main source of income, there is no sure that they will continue with the welfare for the population. The problem with the GCC, they are unable to diversify their income. Depending on oil means you are subject to the challenge of the decrease of oil prices. I think we need to diversify our income. We need to one day when the prices go down below the 30 or below 40, the GCC governments will not only be unable to provide subsidies, but they will be facing challenges like debt and deficits in the budget. So and they will go back to their reserves to use it. I think we have two main problems in the GCC economy. One is they relying on oil as a main source of income. This should be solved as soon as possible. The other thing, the type of consumption we have in the household population, our consumption is not productive. Our consumption is not really productive. Our consumption is the waste of money. We buy so many even poor people, they buy they buy high quality of goods and services, and this is why our consumption is the cause of poverty in the region. We have a lot of income. We are rich countries, but because of two things, the diversification and consumption. So and that's why we have the poverty and poor people an increase in money in the country, in the region. I think we need to replan, to restructure the economy. Our economy needs to restructure. Our economy needs to have a different policy rather than the state play with everything. What is happening now in the region? The country or the state sells its oil, receives oil. This is the policy. This is the structure of economy. Receives the price of oil, and then inject that money into the economy. The private sector need wait for the government when they inject its money into the economy. This is, I think, wrong. But and we need to reach. That's why we need to restructure the economy. The private sector need to be reformed. The private sectors need to be encouraged in investment, private sector, and the government investment need to be reduced, in order to encourage private sector to invest more and more. But by doing that, selling the oil and then receive the prices and then inject that price into the economy, this without with this will not help us to grow and to have sustainable economy.
It's clear, Dr. Jaffar. Thank you. I think Dr. Jarmo has a comment on this. Go ahead.
I think I'd like to echo something that Dr. Jaffar was saying, which is that even if, let's assume, the GCC governments can continue with their old habits, should they? In other words, does it make sense for a government that still today derives its wealth primarily from a depletable natural resource to use that income to support private consumption? Because one way of thinking about this is that oil and gas is one type of wealth that these countries have. Now, if the income from that wealth is used to sponsor consumption, the wealth of the nation effectively goes down. The only way to preserve wealth is either that income is invested in revenue earning assets, or it is invested in productive assets that push up the national income. So in that sense, I think by encouraging more household savings, we can reduce the reliance on this welfare state and make sure, among other things, that this God-given wealth is also preserved for future generations.
Thank you. Thanks, Dr. Jarmo and Dr. Jaffar. We have roughly 10 minutes, 15 minutes, and I would like to focus on two questions that are the underlying notions or maybe hypothesis of this session. Is number one is there is a strong consensus among our panelists that household saving is a socio-economic imperative. It is the way to mitigate risk management and so on. Let's now talk about the how. How can we turn our local economies in the MENA region to, Dr. Jaffar and Dr. Jarmo spoke a little bit about restructuring, but maybe restructuring is something big for this session. But at least how can we turn them to be savings economies? Let me start with Natalie.
Yes, thank you very much. And I agree that the how is the most important, actually, because we know that the governments can, for example, launch local programs. And and thanks for including the link in the web chat, which shows the map of IOPA. It is a link to local markets examples, what types of programs they have put in place to incentivize households to save and invest more. I've also just sent a report that answers one of the questions. One participant asked a question on how does the region approach gathering data for new savings index, and are there any appropriate benchmarks from outside the region? So there is one report that was published on household participation in capital markets with data. So for this question that came from the audience. But let me go back to the how, Ebrahim, that you asked. The OECD, they have published a study that said the earlier citizens learn in their life around investing and saving, the more sustainable they will be able to create a robust financial future for themselves. And it begins in the school, actually. So the strong suggestion by the OECD and by the European governments is that it needs to be built in as a mandatory subject in the school curriculum. It can be a standalone subject, or it can be included in maths or economics, but financial savings and investing must be a part of the school curriculum. And what I would like to add, as speaking from the perspective as an asset manager, is it's really important to start practicing early. So it is almost like a language that is learned over the many years. So if I learn one part of a vocabulary every day, and I put it into practice by trying to speak, then I become truly financial literate. And there is a myth also around that many people think they need to be very wealthy before they start investing, but that is actually not true. That's one of the most tragic errors or thinking errors that are being done, because the earlier citizens start, even the young savers, to practice and to learn the concepts of risk diversification, of risk and return, how they are correlated around the different asset classes, the more they can build knowledge. And if they make errors with small amounts of money, they can be corrected throughout life. But what is important is the learning potential that it brings along, rather than trying to first save a lot of money and then very much at a late stage in life to start investing. Because if I start at that point with very larger amounts of money and then make a mistake, then it's harder to correct it, and it is has a bigger impact also on my retirement. So the recommendation on the how is start early, try different things, start with small amounts of capital, and simply continue on a regular basis to build up knowledge and to explore different asset classes. So there must be a fundamental, and Ebrahim mentioned at the beginning of our session, that there should be a shift in mindset. And that's the shift in mindset that we need. We don't need to wait until we have become wealthy already, because we need to start very early with small bits and small learning steps, and learn how to save and how to invest for ourselves over a long period of time.
Dr. Jarmo, at the national level within the MENA region, how do we tend to be more of savings economies?
And you are talking about private savings.
Yes, household savings is.
Yeah. I think that this is perhaps to the frustration of many policymakers, as Natalie suggested. This is an area with very few magic bullet solutions, quick fixes. I think it is above all a cultural transition, and it's important to think of it in terms of a national strategy, and if you like, almost like a national communications plan. So. And obviously, it's very important for us to be cognizant of what is ours. And I think that where I see particular short-term opportunities in the Gulf region is, for instance, the financial regulators gently leaning on the regulated entities in terms of not only disseminating awareness, but also devising products that make it easier for people to save. So, of course, one of the challenges, the reason I think why many people think, okay, you have to have a lot of money before you can start to save, is because these kinds of ongoing savings products, where you can start very small, not necessarily very readily available in this part of the world. So if banks can tell their customers, okay, you open your current account, we also give you a savings account, and we propose you put, I don't know, 100 dinars a month, 200 dinars a month in your savings account. And after you have a certain minimum, then we can talk about stock market investments, bond market investments, etc. Obviously, depending on your appetite, maybe some financial advisory capacity at banks for those who are interested. Of course, as you are showing to the community, Ebrahim, it is possible also to do a lot of this digitally now. So it's no longer about going to the bank and sitting down in front of a person. I think the government pension funds probably have a role to play in this regard by helping people understand what more could be done, how they can further enhance their pension security, and partly because, look, the reality is all the Gulf pension funds, government pension funds, are now on this sort of slippery slide of recurrent parametric reform to try to extend the lifespan of these funds. So it would be good to sort of explain to people that there are additional steps they can take to enhance their security. Insurance companies, I know insurance, of course, comes with a certain amount of historical/cultural baggage, but insurance companies similarly can have a role to play in terms of helping people better manage their risks, but also save in a more structured, perhaps devising products that combine elements of precautionary insurance and life insurance. Of course, we all know insurance penetration levels in the region are still internationally low. Life insurance penetration rates are abysmally low by international comparison. So there's a great deal that could be done. I think the one area where the Gulf countries have done reasonably well, especially Saudi Arabia, is in terms of popularizing saving through stocks and shares. I think now the key question is, how do we expand the remit of this? In other words, make it easier for retail investors, make it less risky, perhaps through different kinds of mutual fund products, etc. And I think that what would potentially help there is having more ETFs and funds listed on stock exchanges, as opposed to people then having to search high and low to their banks and asset managers.
Thank you, Doctor. Dr. Jaffar Al-Sayegh, I think you've heard Natalie and Dr. Jarmo to speak about how can we turn our national economies in the Arab world and the MENA region to be more of a savings economies. I don't know what else you would like to add to what they said.
I think what we need to add, what other countries have added, developed countries have added to their economy. We need incentives. We need our household know what they are doing, know the importance of saving. They should be aware of the consequences of ignoring saving. We need, as one of your colleagues mentioned, we need to introduce in our curriculum the importance of saving and consumption. I again insist and repeating what I have said earlier. The saving is important, like the consumption. If we want to make sure that we are able to consume, we should make sure that in the future we should be able to consume also. Saving can be encouraged through the government, through the media, through the incentives policies, through the government programs. I don't have to mention them, but there are many policies that make sure the saving, the aware of household should be positive, and should be known to why we need to save, why we need to change our consumption. Um, uh, this is the policy that should be done decades ago. How much we spent money, how much we wasted money. See if you look at the government, when the government when the oil prices increased, the government will invest a lot in economy, and saving will not be that much important for them. So and for the household as well. When the oil prices increase, I think we go to intend more consumption, intend to consume more because and we ignore the saving. I think the government need to change their policy, need to change its policy, its measures, its laws to encourage the policy. I know in economy we say when the tariffs or taxes increase or decrease, people will be able to save. But this is not applied to our household. Here, when taxes decrease, people consume more. Maybe because they need to save to consume more, and maybe and that is 100% sure, because they don't give any importance to saving.
Thank you, Dr. Jaffar. This is the final question of this session. I think it's really amazing how the insights of the three speakers today have been strongly well grounded economically, socially, on how important is household savings to economics and the sort of interconnected relationship, the one-to-one relationship between the health of household savings and the health of national economy. And this has been so rich, so amazing in one of the very unique sessions where we've got this body of economics knowledge around household savings. The way we would like to conclude this session is, I think the management guru Peter Drucker once said or quoted saying, "What cannot be measured cannot be managed." So with household saving being that fundamental, that important, that urgent to fix broken economies, if we re-quote Dr. Jarmo at the beginning, is how do we go about measuring household savings in the MENA region, in the GCC? I don't know, maybe on monthly basis or annual basis. What's the best way to put a survey or an index to measure this? Who are the proposed stakeholders? Where do we start, and so on? I know maybe this is not core to your specialties, but this is more of a brainstorming session since we are already warmed up on the notion of household savings. I would like to start with Dr. Jarmo, please.
Yeah, so it's an interesting question, and of course, Peter Drucker usually didn't talk nonsense. So I think you put your finger on an important issue there, and quite frankly, today, anybody wanting to understand how much Arab households save, well, good luck to them. I don't think that there is much by way of structured information on the subject. Who should do it? Well, it would be nice if the government, if the central banks could somehow put their weight behind it. I think what I would say is probably less important who does it, provided it is done by an entity, private or public, that can do it with credibility, objectivity, in a way that is verifiable. I mean, obviously, anybody can put numbers out there, but ideally, people should be able to then see where these numbers come from, what they're based on, and see what sort of trends are emerging over time. I think today we have, probably in fairness, a large number of also private sector players, whether it's financial institutions or it's consultants, it's rating agencies or whatever, with the capacity to do something like this. And I think that part of getting it right in terms of encouraging savings is putting savings on the map. Whatever else such an index, if it is properly publicized, does, it puts the concept on people's radar screen. That is the thing.
Natalie?
Thank you. Yes, I think that I can think of two ways, two possible solutions. One is to maybe establish a GCC level or MENA level cooperation from the public sector that collates that type of data, where perhaps it's the finance ministries provide data if they collect such data, and that can then
Maybe it could be the Arab Monetary Fund, AMF, because it's the sort of the regional IMF copy. Yeah.
I think that would be an excellent way to collate the data. The alternative, so the second thing I was thinking about is, so in Europe we do this also through industry associations, where the local associations feed into the European association, and it's pretty much the market participants, like the asset managers, but also the banks and insurance providers. They would then provide the data, anonymized of course, but the statistical data on the level of savings. So that would be plan B. But I wanted to use this opportunity to say two things. I believe we have a real opportunity to increase household savings, because with the digital tools now that exist and the access to internet, there's access to products and there is much more access to information and to guidance and advice. So this goes back to the how. So we have the tools with the digital means, but there is another angle, which is not just the how, but the why. So how can we incentivize households to save more and maybe spend less, if that's the right thing to do? This is here very critical, a new trend in sustainability. So sustainable investment products, in sustainable financial products that exist in banking, asset management, and insurance, which pretty much means that the way we go about investing into companies is now we check what is their environmental impact. Do they safeguard, what is the social criteria that they apply? Do they apply the labor rights across the supply chain? And the third is governance. So are they well-managed companies to the best standards that we know? These are the ESG criteria, and overall these are referred to as sustainable and responsible investing. And if households realize that they can have an impact on the world around them and on the economy that they live in and the future that they have, if they choose sustainable financial savings and investment products, they might really feel encouraged to save more, because then their money doesn't just sit on a bank account, but it actually has an impact on the way and the world around us and the way we live. So there are standards being developed in that space. I know it's a big topic in the region as well. And here we need to make the link between motivating households and the how is through the digital channels.
Thank you, Dr. Natalie, because we've exceeded our time, and I have also to let Dr. Jaffar to add his perspective if he likes.
I won't be long. Actually, I agree with my colleagues, the speakers, what they have done, what they have mentioned. Actually, let me say this. governments, and they know the importance and the role of investment. And that's why they have done so many things to encourage investment. They have done, there are departments, ministries for investment. They have their own, each government have their own incentives policies. And they have done the infrastructure. They done the necessary infrastructure to encourage and increase investment. That the role of investment, it's known for the government, for the household. I want to mention what we need, what organizations, what departments, what policies we need to encourage the saving. I think it is the same departments. In other countries, there are departments for the to monitor savings. This is what what I can mention about, and of course, we are lacking the shorting of time.
Shukran, thanks, Dr. Jaffar. We are almost 4 minutes past the time, and we have another session coming in a few minutes. So I would only give the mic to anyone who would like to say final extra things for the next, just for no more than 30 seconds. If you have anything to add, otherwise, I would like to close. Please let me know.
Just thank you very much for the opportunity to participate. Thank you.
So, Doctor, you have anything to add? Dr. Jarmo?
I can only echo what Natalie just said. So I think it was a good discussion, an important discussion. Thank you for making it happen.
Thank you so much. Thank you so much, our distinguished speakers for today, Miss Natalie Westerbarkey, Dr. Jarmo Kotilaine, Dr. Khoula Kenzari from Tunisia. She's an economist. We lost her at the beginning of today's session due to the internet connectivity. And last but not least, Dr. Jaffar Al-Sayegh from Bahrain Economist Society. Thank you so much for your precious time, for very fresh insights today, and for encouraging household savings and putting it on the agenda. Thank you so much, and see you in the next platforms.
Thank you so much. Thank you.
Thank you. Thank you so much. Bye-bye.